was another big week in the semiconductor industry as usual, but big this week because Nvidia reported their Q3 earnings. We'll talk about some of the things that you might not have seen on our channel, maybe elsewhere out there in terms of analysis. We'll talk about some different things as it relates to the financial results. Now, as it's always the case with Nvidia, it's all about future performance. As we have Blackwell launching and getting to full production, it's all about those revenue projections moving into next year. Now, at one time, we had a little bit of a view into next year. I'll give you an update on where Wall Street's expecting some of these revenues coming in next year and how we've got an even bigger discrepancy between the low and the high-end revenue estimates. And if Nvidia is able to come towards those high-end estimates, well, I think you probably know where the shares of Nvidia are going to be headed. We had AMD announce that they are now the leader in supercomputer power, and we'll talk about that and what it means potentially for AMD, certainly Nvidia, and then also, is Supermicro's troubles behind them? We'll talk about the developments in Supermicro this week, and then also we'll get into the technicals. There's multiple technicals that are setting up for a buy as you move into a holiday week next week. Let's kick things off with Nvidia. Start of the week at 138 on an earnings week. Relatively muted performance from the semiconductor giant, up about 2.4%. Finished the week, we'll call it about $142 per share. Some of the things that we're monitoring across all of the semiconductor industry, but particularly Nvidia as well, is the new Trump administration. Towards the tail end or during the Trump administration, he did put restrictions on technology products being sold into China. President Joe Biden came into power in 2020 and basically escalated that to a new level. Now, it remains to be seen if the former president, soon to be current president, is going to continue that policy of restriction. And if they do, well, it certainly means somewhat muted sales for Nvidia, at least on the high end. Now, Nvidia did receive a rare downgrade this week as Phillip Capital downgraded the stock. Now, they didn't downgrade it to a sell, but I think this is actually a pretty reasonable way to look at Nvidia. They had it ranked as a buy, and now they downgraded it to what I like this term is accumulate. They did increase the price target from 155 to 160. And across Wall Street, this is basically what I've been saying, is that Nvidia's performance, certainly year to date, is spectacular. Over the past year has been absolutely extraordinary. And for the company to be able to have that similar performance as we look out 365 days is going to be relatively difficult. Now, does that mean you go out and sell your Nvidia shares? Probably not. Does it mean you continue to hold? Absolutely. Does it mean you maybe slowly add to maybe a current position? That's also something that you can do. Now, some bullish things could potentially be happening for Nvidia as I keep a close eye on the revenue estimates that the Wall Street analysts are projecting for the company as you head into future quarters. For the fourth quarter, as you know, Nvidia gave somewhat muted guidance that was below expectations, including myself was expecting a number closer to about $40 billion. The company came in at about $37.5, $38 billion is the current estimate on Wall Street. These things will continue to get adjusted as you move into that January period when the company reports again. Now, the high end is at 42, the low end is at 36. As you look out to another quarter, Q1 of next year, it's really kind of the early springtime. High-end estimate is for $47 billion. The low end is for 40. I think the company is going to be able to easily and comfortably get over those expectations. It's really as you move into the second half of next calendar year is when you see some wide discrepancies, 42 upwards of $53 billion as you get into fiscal Q2 for Nvidia. And here's where things get really wacky. When you get into the third and fourth quarter next year for Nvidia, analysts have no idea where the revenue is going to come in. The low end street estimate is for $37 billion. The high end is for $76 billion. Back in October, that high-end estimate was actually at $56 billion. So there are analysts on Wall Street that not only continue to bump up their targets, but exponentially bump them up by over $20 billion. Again, this is just a year away. In fact, less than a year away. And more shockingly than that, when you get out to Q4 of next year, the low-end estimate is for $31 billion, which would be a year-over-year decline on revenues. The high end is now $100 billion. Back in October, we pointed out that the spread was $25 to $80 billion. So you have an analyst on Wall Street continuing to bump up their targets for Blackwell. What do they know? What do they see in the marketplace? Is this all smoke and mirrors, or is there some validity as we move into the next era of computing for NVIDIA, as we usher in Blackwell? We have companies like Meta, like Amazon, like Google, like Microsoft. They're spending right in that $100 billion a year on CapEx. Well, there's a Wall Street estimate that $100 billion worth of revenue will come in a single quarter for NVIDIA. And if NVIDIA comes anywhere close to $100 billion, even if we come close to the $70 billion mark, I actually think this is more than an accumulating stock. This is one that you should be actively buying, because if they can get to $100 billion worth of revenue, we know where the gross margins are going to come in at. The company telegraphed over the next several quarters, they are likely to come down a little bit, but they're going to come down from astronomical levels, kind of mid 70% range. They're going to come down to the low 70% range as the Blackwell chip starts to ramp. And then towards the back half of next year, when you get into full production and full productivity of producing the chip, you're going to get back into this mid 70s. So if the company is able to produce 70, 80, $100 billion of revenue in a single quarter at mid 70% growth rate, or gross margins, we are looking at profits that we just simply have not seen. And this company should be and is the most valuable company in the world. And if they can produce that type of results as we move into next year, well, this company certainly will continue to perform very, very well. Now, there are some cracks underneath the hood over at NVIDIA. We pointed it out on a video here on the channel earlier this week. 3 stocks to buy now after NVIDIA's InfiniBand fails to impress. What am I talking about? That is the networking component of the data center. Inside of the $30 billion worth of revenue that the company recognized in the most recent quarter, 27.5, a little over that, comes from the actual GPUs. But networking, which is the switches and NICs that kind of put all of this system together, well, that was about a $3.1 billion component. Disappointing, though, for NVIDIA in the fact that quarter over quarter, that was actually down by about 15%, from $3.7 billion last quarter down to 3.1. Now, I saw some commentary that there was larger than expected orders from China coming in from the compute side, and China does not really pair their compute power with the InfiniBand systems. As you move into next year and you have Microsoft kind of front running or kind of being the lead buyer of the Blackwell chip, at least initially, they tend to focus and use a lot of InfiniBand. But we even see year over year just up 20% from a revenue perspective, from $2.6 billion up to $3.1 billion. Again, keep in mind, year over year, your data center revenue was up 112% and your networking business up 20%. So what is that telling us as an investors? That's telling us that the data centers, yes, they're spending a gigantic portion of their CapEx on NVIDIA's products, but they are turning away a little bit from the networking product. And I outlined 3 companies that should absolutely pick up some business and continue to get business. Now, their stocks have run over the past year, but if this trend continues, then that performance should continue. And then needless to say, if NVIDIA can continue to come towards the mid and high-end estimates that Wall Street has for it, well, obviously networking will still continue to be a big revenue point. When we get to AMD, there's also some points about networking, since you're using third parties like Broadcom to network your NVIDIA chips or your AMD chips together. And the company is certainly seeing some bullish things happening. Now, speaking of bullish things happening, Super Micro Computer start of the week at $22 per share, up 48%. The people were just dancing in my comment section saying, look at Super Micro, we're back at $30 per share. I will remind you, though, over the past 6 months, shares of Super Micro Computer are down 62%, meaning this stock needs to rise more than 100%. And it still wouldn't be back to the 6-month high. Just keep in mind, when people are celebrating about Super Micro Computer, they are bag holding, because year to date, you're up just 16% on this one. That is lagging behind the broader market, to certainly lagging behind the semiconductor market. And even over the past year, you're up just 15% on this stock. So you are holding those bags, but everybody is holding their breath now for Supermicro to come into compliance with the NASDAQ. The NASDAQ released a form letter to Supermicro saying you are still in non-compliance of the NASDAQ listing rules. Listing rules for the NASDAQ require a company to timely file their 10K annual reports and their 10Q quarterly reports. As you know, Supermicro had their auditor, Ernst & Young, basically retire from the company, saying, we're not going to do your financials. And that put a delay on the 10K annual report. It also is putting a delay on the 10Q report. Now, the company does have a plan. NASDAQ is probably going to give them the benefit of the doubt. These compliance letters tend to get sent out almost like a form letter. NASDAQ, I think, in my opinion, probably should work with Supermicro. Will they work with Supermicro? It's up to the NASDAQ, but I think they probably will. The company has hired a new, or engaged a new accounting firm called BDO USA. That is effective immediately. That company is probably actively getting to work. While I don't have it here in front of me, I do believe that Supermicro indicated that their 10K annual report should be ready by the end of January now, and that the 10Q quarterly report should be available shortly after that, but the 10K annual report has to get done before the quarterly report. The company still has kind of an internal team looking into things. They continue to say that work is going to be done shortly. They've been saying that for basically the past couple of weeks. While these advancements certainly are good news for Supermicro, show some signs of life over there, I think some of the performance that the stock has had over the past couple of days has really more or less been shortcoming, as again, you have retail investors on the long side that have piled into this. Also, retail investors from the short end have piled into this one. The time to short Supermicro Computer was back in April, when I called this stock $150 trash when it was trading closer to $800 per share. That was the time to sell the stock. That is because the company had negative operating cash flows on a business that was absolutely on fire. That's a huge red flag, let alone all these accounting issues that have materialized since then. I maintain my stance on Supermicro Computer. If you want to invest in these types of things, you're more or less a gambler. I don't think you're an investor. There is no way to replicate this business model of investing in Supermicro. So you're going to invest in Supermicro, and then you're going to go out there and use that as a method of investing to go find other distressed assets. There are some distressed asset investors. I don't think any of them watch YouTube videos, and I don't think any of them do the majority of their trading inside of a Robinhood account. They tend to be institutional investors with a lot of great information on their side. I'll wait till the smoke clears on Supermicro. As it stands right now, they've got a pretty low multiple. This one could be a great buying opportunity. We'll look at it technically here in a moment, but disciplined investors like myself will continue to remain on the sidelines, since I don't care what the company is. I don't care if my mom is the CEO. I wouldn't buy shares of a company that is out of compliance with the NASDAQ and continuing to get letters of non-compliance and still haven't produced financials in over 6 months. Now, moving over to Qualcomm, it had a bad week, sneaky bad week, flew under the radar, started the week at 164, down about 4.5% after the company had a shareholder event where they're seeing $4 billion in PC chip sales and $8 billion in automobile revenue by 2029. The company's seeing that their business is going to start to get more diversified away from handsets, as Apple has long been rumored to want to build its own modem technology and move away from Qualcomm. Certainly would be detrimental to Qualcomm's revenue. And it's probably priced in a little bit to Qualcomm stock, because again, you're trading at about 14 times on this one. You get about a 2% dividend yield. They're buying back the shares as well. So you're not paying a huge multiple for Qualcomm, I think in part because some investors are already kind of pricing in the fact that Apple is eventually going to walk away. Now, somebody that was not impressed with the company's investor day was Irrational Analysis, somebody that I read on Substack. I'll have a link to this down below in the YouTube video. If you do find this article interesting, you can maybe leave a comment on the article that we sent to you over there. He was not mincing words as it relates to Qualcomm's Investors Day, basically kind of rolling his eyes, laughing at the different slides, talking about how the BMW program, because we talked about how Qualcomm is anticipating $8 billion in automobile revenue by 2029. He says the BMW program is rumored to be a dumpster fire and that BMW hates Qualcomm's stack and actually wrote their own. Qualcomm is talking up kind of AI on the edge. That is in kind of like IoT devices and smaller devices on the edge. They also kind of touted their AR, XR, VR platform. In fact, they even showed off the Meta Quest and the new, I think, Orion prototype glasses released by Meta. But the interesting thing is Meta's prototype AR glasses actually feature a chip co-developed with MediaTek. And it looks like Meta is moving away from Qualcomm's designs. Guy also saying that the laptops which have come out with Snapdragon have only 6 to 8 hours of battery life, which seems really, really bad. I've got like a 4-year-old MacBook that'll at least outdo that. And he's basically saying that ARM will eventually be a beneficiary of a lot of these things like automobiles, IoT, compute inside the computer, networking, all those types of things. And then even like a company like MediaTek will benefit from AR, VR inside of those glasses as Qualcomm's devices are being passed over by Meta. This was an interesting and certainly a worthwhile read. Again, I'll have a link down below to the Substack below, and you can take a full look. Moving over to AMD, started the week at we'll call it 140, down about 1%, finished the week at about 138. You're definitely going to want to see AMD and several other of these stocks here in a moment, technically. Now, AMD's powered supercomputer is overtaking Nvidia for the first time. That El Capitan, which is located in the beautiful Lawrence Livermore National Laboratory right here in California, scored the highest out of all the supercomputers in existence. I thought what was interesting here as well, you have Intel processors accounting for about 15% of the cores represented in the rankings, compared to about 13% a year ago. So Intel gaining some ground here as well. AMD showing that they've got supercomputer chops as well. Now, IBM is going to ink an AI partnership with AMD. AMD is getting a lot of wins on their MI300X accelerators. I think they've got another version coming out sometime next year as well. Also, when we talk about networking, okay, when we talk about the Broadcoms and the other stocks that I talked about on my video, they are going to pair well with these types of deals because AMD doesn't really have its own proprietary networking system. And so companies are going to use other parties, other public companies. And so as AMD continues to expand their business, and I tell you what, that MI300, that data center revenue for AMD in the last quarter looked absolutely spectacular. And so these types of deals certainly can be bullish. Now, something that may not be bullish, and people were concerned about this, is the chief accounting officer resigned. Tell you what, when you see these semiconductor companies have problems with the accounting officers, you get a little scared. This wasn't just the chief accounting officer, but it was also the corporate vice president as well. No real details on why this happened, but maybe if AMD's revenue and their accounting kind of sucks going forward, you might have a reason for it. Moving on to Intel. Start of the week at, call it about $24, down just fractionally by about 1%, as you have Lattice Semi is considering making an offer to buy Intel's Altera unit. Now, we've talked about this numerous times when we've looked at Intel. They're shopping around this Altera business, which they bought in 2015 for $16.7 billion. The company is trying to shop it out there in the marketplace for about $17 billion. We've heard rumors of Qualcomm, other businesses. Actually, the first I've heard of Lattice potentially working with other private equity firms to consider making an offer for the programmable chip company. Now, Altera is wholly owned by Intel. Currently, Intel wants to sell a minority stake, potentially for a couple of $1 billion. This Lattice company, I think, is worth about $7 billion. So it makes sense that if they're going to make a bid for Altera, it would only be for a portion of the company. Intel getting a couple $1 billion from this business unit probably be a good thing, considering when we've looked at the financials of Altera, the revenues are declining and so are the operating profits. If they can pull forward several $1 billion, that would actually, I think, be a good thing. Now, get your pen and paper handy because we've got several semiconductor stocks that are in a buying opportunity. I stepped in on the SOXX ETF. As you can see, we've got multiple trends here. So we've got this long-term purple trend line. This is the longer-term trend. We have to assume that the index will want to make its way back to that level. Now, could it be at this level? We've reached the highs that we have in this index back in July, and this thing is going to crap out. Well, yeah, that's possible. And so I have a stop loss set on this one right here about the lows, about 203. But I'm anticipating finding some footing here, making our way back into the 240s, and that's where I'd probably start exiting that. The SMH is in a little bit better shape, still above the middle of the channel. That one's just holding firm there. Nvidia has just confirmed a new higher high. It's actually touching the bottom, or coming close to touching a bottom channel level where you can, again, I think, to steal the words of the analyst earlier, this is an accumulation area of Nvidia. You can add to an existing position. You can start a position if you just missed most of this rally. That is looking good for Nvidia. Now, AMD's very interesting position. Anytime we've got this purple line on here, it indicates a slightly longer term trend. And this one goes back to 2015. We've kind of been hitting our head up against it, but unfortunately, we haven't been confirming higher highs. This one looks like, to me, it's a natural pullback to an area where you can step in and buy AMD if you want to. You'd probably want to stop loss, maybe even just below that if you want to. If you want to really set this one up really tightly, you have a stop loss just below the price you have, because if you do break this purple trend line, you're coming back to probably consolidation areas much lower. Now, Broadcom does not report their earnings until December, so we've still got maybe a week or two before earnings. This one's in a beautiful channel, and so it actually is trading at the top of a channel, but it's been holding this kind of intermediate trend represented by this purple line. This has actually been holding for about 2 years now. We'll see if the company is able to hold that and continue to move forward, although with Broadcom, pullbacks would be very exciting because it's a company you probably want to own. Now, Intel actually in the short term is looking, this is absolutely what you want to see. And you want to see this when we get to super micro computer as well. This is kind of the indication where you can step in here and buy. We'll darken up these lines a little bit so you can see them, but this looks absolutely fantastic with Intel. Now, again, longer term trend sucks. Intermediate term trend absolutely sucks. But the short-term trend with Intel looks absolutely sensational. You're making higher highs, higher lows. It's actually at a point where you can step in there and buy that one. What's not looking great is Qualcomm, but it's still holding a long-term channel and trend line. This one's still above an area where we'd be excited about it, but pullbacks in Qualcomm, despite some of the bearish comments of the company's business models, should probably be bought. Taiwan Semiconductor just confirmed a new higher high. You're praying this one continues to pull back, probably back into the 160s would be a back the truck up type of moment. ASML continues to be in an accumulation area. Anywhere south of the midpoint is accumulation zone. I wouldn't wait until you come all the way and touch the bottom of the channel. Those are areas which you rarely see. Now, a semiconductor company that I actually bought this for the very first time, talked about it on last week's show. So don't say this is hindsight and I'm getting near it. No, I said this on last week's show. This was in a buying area. Look at NXP. This is a long-term trend. In fact, we can change that to a purple line so you know which one I'm talking about. In fact, we can switch this to a monthly view so you get a very good indication. Look at that purple trend, folks. That is the long-term trend. When you pull back to long-term trend, you buy. It is really as simple as that. Some of you guys look at super microcomputer and you say, oh, it's down, so I buy. No, it should be much more systematic than that. You say, hey, long-term trend pulls back, I buy. I bought NXP actually on these lows, so I'm already up a couple percentage point. If it doesn't hold this level, I'll get stopped out and I'll lose money. Moving over to ARM, this one's actually looking still really good. You've got probably a longer-term trend here. It's not being confirmed by higher highs, complicating the situation. You really don't get earnings or news from this one. You don't get that Qualcomm settlement in that Substack that I've talked about. He actually has a trade set up here. I don't know if it's a good trade setup or not, but he's betting his money on ARM, and certainly if ARM benefits from that licensing agreement, you could have a move to the upside. You get a move to the upside, you could retest highs up here. About $180. Now, SMCI has found footing and found consolidation in an area that we had marked out here, $22 to $35 per share. I think the shares chop around in this level. Technically, you're still in this downtrend. You have not made a new higher high. You've confirmed a new lower low. In fact, if this one breaks lower, you're going to break much lower. Pending the company's financials, pending them continuing to be listed on NASDAQ, All of those things hang in the balance. Dell looks absolutely fantastic. In fact, we'll get Dell earnings just 2 days from now. I'll probably post those here on this channel. So you'll get a full earnings recap of Dell the day they happen. That'll be Tuesday the 26th. I don't think I have anything on my calendar that will prohibit me from doing those. We'll look at this one technically because it's kind of been holding this level. You're in a longer term channel. This thing looks really, really good. You have positive earnings on this one. You could retest highs up here at about 178 bucks. Micron is hovering right in the middle of the channel. These are, again, areas where you can accumulate. Lam Research, also middle of the channel. Those can be areas where you accumulate, and also Applied Materials pulling underneath the bottom of the channel. These also areas where you can accumulate. I'm just waiting a little bit on these ones, but I'll probably jump in on both of those stocks, at least from a trade perspective, here very soon. Folks, that was Semiconductor Show for Sunday, November 24th. Hopefully you enjoyed today's video. Back again next week. And again, join us on the channel for Dell earnings in just 2 days. See you then.